Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session in which we cover the important and relevant finance current affairs and the RBI notification, the RBI press releases. Today I have brought a very important RBI notification for all of you. So RBI has recently relaxed certain norms for the urban cooperative banks. So this is a very important notification that the Reserve Bank of India has recently released, that we are going to discuss that what were the earlier norms and what is the relaxation that has been provided by the Reserve Bank of India. And the UCBs, you can understand that in the previous RBI Grade B examination, there was a direct question from the urban cooperative banks and the change in the norms for the urban cooperative banks. So again, this topic is quite in news and this topic is being highlighted in many of the newspapers. So you can understand that this is very, very important from your regulatory body examination perspective. Okay. So let's get started. But before that, do tell me if I am clearly audible and visible. I hope there is no problem that is coming in the visibility or in the sound. So good morning everyone, and before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel so that you can get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so let's start with today's session. Let's start with today's very important topic. So first of all, the Reserve Bank of India has from time to time prescribed various prudential norms. These are the guidelines that are specified by the Reserve Bank of India for the banks so that they manage their risk, they maintain the liquidity and the capital to maintain the stability in the banks. Okay, so prudential norms are those guidelines issued by the RBI for the banks to manage their risk, to maintain their capital and liquidity. So the Reserve Bank of India has prescribed from time to time various prudential norms for the urban cooperative banks so that they remain financial sound and the resilient. Okay, so for enhancing the financial soundness and the resilience of the UCBs, the RBI has detailed the prudential norms. But now the RBI wants to provide the relaxation in these prudential norms so that the UCBs have more operational flexibilities. So with a view to rationalize these norms and thereby allowing greater operational flexibility to the UCBs, the RBI has reviewed the whole of the prudential norms and has rationalized the prudential norms. So there are the changes that has been made by the Reserve Bank of India on the prudential norms for the UCBs. So we will discuss that what is the change that has been made one by one. So first of all, the small value loans. So as per the older norms, and this, remember that the UCBs were in news in the July 2024 also, and this we have discussed in a previous session, that it was said that 50%. So Reserve Bank of India wanted that 50% of the loan of the total loans and advances that is given by the UCBs. So 50% of the total loans and advances. So minimum 50% of the total loans and advances of the UCBs should go to small value loans. Okay, should go for the small value loans. So RBI wanted this to happen, but the UCBs, they requested RBI to provide a glide path to the UCBs. Okay, so RBI had provided a glide path timeline for the UCBs to achieve this minimum 50% of small value loans from its total loans and advances. So it was said by the Reserve Bank of India that by March 31st, 2025, the UCB should have minimum 40% of the small value loans in aggregate loans and advances and minimum 50%. So by March 31st, 2026, minimum 50% of the minimum 50% of the small value loans should be there in the aggregate loans and advances. So what was the definition of small value loans? So small value loans were those loans that were of not more than 25 lakhs, not more than 25 lakhs, or not more than 0.2% of the tier 1 capital. So let's say that 0.2% of the tier 1 capital is, let's say, 10 crores. Or 0.2% of tier 1 capital is, let's say, 20 crores. But here it is said that 0.2% of their tier 1 capital subject to a maximum of 1 crore per borrower. So small value loans should not be more than 25 lakhs or 0.2% of the tier 1 capital up to the limit of 1 crore per borrower. Now whichever is higher, if this is higher or if this is higher, so whichever is higher, let's say this is higher, this is approximately 75 lakhs. So this can be considered the small value loan. So the definition that was provided for the small value loan was that the small value loans are those which are not more than 25 lakhs or they are not more than 0.2% of the tier 1 capital, maximum to a 1 crore per borrower. So whichever is higher. Okay. Okay. So I will take the extra queries at the end of the session. First of all, focus on this topic. So now these were the older norms. Now what are the revised norms? What are the changes that has been done by the RBI in the category of small value loans? So actually the definition of small value loan has been changed. So on a review, it has been decided to revise the definition of the small value loans. Now the small value loans will be those loans which are not more than 25 lakh and which are not more than 0.4% of the tier 1 capital. And 0.4% of tier 1 capital, let's say it is 20 crores, 10 crores, 5 crores. So now the maximum ceiling is provided at the 3 crore per borrower. Before it was 1 crore per borrower, and tier 1 capital 0.2% was taken of the tier 1 capital. Now 0.4% is taken of the tier 1 capital. Okay. So on a review, it has been decided to change or revise the definition of small value loans. So now the small value loans are those loans that are not more than 25 lakhs or they are not more than 0.4% of the tier 1 capital, that is subjected to a maximum cap of 3 crores. So whichever is higher, that will be considered the small value loan. So the definition has been changed. I hope this is clear. So Aditya, Nitya, Sorish, is it clear? Now, the definition has been changed, but the RBI has specified that all the other conditions, the timeline that is provided will remain this only. So, the timeline and the other conditions for the small value loans will be this only. And it has been specified that the boards of UCBs, the board of director of urban cooperative banks, they shall periodically review the portfolio behavior and quality under the different loan sizes, under the loan sizes of small value loans, large value loans. So under the different loan categories, the portfolio and the quality has to be checked. That there are not many NPAs that are coming, there are not many loans that are converting into non-performing asset. So this has to be checked. Okay. So board of UCBs shall periodically review the portfolio behavior and the quality under the different loan size categories, and where necessary may consider fixing the lower ceilings also. So this is the idea provided by the Reserve Bank of India. Okay. So in the revised norms, just keep in mind that the definition of small value loan has been revised. Now the second thing, the change that has happened. First of all, older norm. So the UCBs, they can provide the loans for the real estate. Okay. So in terms of existing instruction, in terms of the current instructions or the before instructions, aggregate exposure or aggregate loans or total loans and advances of a UCBs to housing, real estate and commercial real estate loans. So the total exposure of a UCB that can happen to the housing, the loans that can be provided to the housing, to the real estate buildings or to the commercial real estate buildings, this is capped at 10% of its total asset. So that is, out of the total asset, 10% can be given as the aggregate exposure to the housing, real estate, that is usually the buildings built by the big builders and such, and the commercial real estate. Okay. So 10% of the total asset. Now here one thing was given, that the ceiling of 10% can be exceeded by an additional 5% of total assets if the loan is given for the priority sector housing. How many of you know that? How many of you know about the priority sector lending? What is priority sector lending? So under the priority sector lending, there are certain sectors identified by the Reserve Bank of India where the banks have to give the money, where the banks have to give a certain percentage of their loans. Okay. So in the priority sectors, there is agriculture, MSME, social infrastructure, renewable energy, and there is also housing. Housing also comes under the priority sector. So now the RBI in the previous guidelines had said that the aggregate exposure to the housing, real estate and the commercial real estate can be only up to 10% of the total asset. But if the exposure, if the loans are given to the housing, that is classified under the priority sector, so then there is additional 5% of the exposure that the UCB can do. That means, see, in the priority sector classification, so bank loans to housing sector as per the limits that are prescribed below, they are eligible for priority sector classification. It's not like that you are giving 50 crores for a house to be built. That should not come under priority sector, right? So in the priority sector, how much loan will be considered for the priority sector under the housing category, that is identified. Okay, so the loans that are given to individuals up to 35 lakh in the metropolitan centers with population of 10 lakh and above, and up to 25 lakh in other centers for purchase or construction of a dwelling unit of a house per family, provided the overall cost of the dwelling. So this is considered as the priority sector lending for the housing segment. Okay, so it is said that the aggregate exposure of the UCBs to the housing, real estate and the commercial real estate should be up to 10% of its total asset, but additional 5% of the total asset, this much additional exposure can happen for the purpose of grant of housing loans that are identified or that are eligible under the limits of the priority sector classification under the housing segment. Okay, yes, so this is the idea. So additional 5% is only for these priority sector lending to the housing sector. Okay, now another point that is under the real estate exposure norms. So further, subject to the above aggregate cap, that is their aggregate exposure of 10% for the housing, real estate, commercial real estate, and exceeding, like there is aggregate, like there is additional percentage that is provided of 5%, that is for the priority sector lending for the housing. But further, subject to the above aggregate caps, the ceiling for individual housing loans are prescribed 60 lakh. So for the individual housing loan, that is for the individual borrower, for the housing loan there is a ceiling that is provided of 60 lakh for the tier 1 UCBs, and for the other UCBs there was the ceiling of 140 lakh for the housing loan. Okay, so subject to the above aggregate caps, the ceiling is provided for the individual borrowing for the housing. For the individual housing loans, there is the ceiling that is provided for the individual housing loan. Let's say you are going to a UCB, Urban Cooperative Bank, to take a housing loan. So for you, if you are taking the loan from a tier 1 Urban Cooperative Bank, then the limit for the Urban Cooperative Bank for providing the loan to you is 60 lakh, and if you are going to any other Urban Cooperative Bank, then the limit for providing the loan to you is 140 lakh. So for the individual housing loans, there are the limits for tier 1 and the other tiers. Okay, so 60 lakh per individual borrower for tier 1 UCBs, this is the limit, and 140 lakh per individual borrower for all the other UCBs. And the UCBs are divided into the different tiers on the basis of the deposit size that they have. The larger the UCB, the higher the tier it will fall in. Okay, so let's say it is a very, you have a very big Urban Cooperative Bank, so that will fall under the category of tier 4, let's say, if the deposits are more than 10,000 crore. Now if you want to know more about the tiers, you can see I have taken a complete session on the different tiers of the UCB. Okay, but actually tier 1 are the smallest of the UCBs. They only have one branch, or they are only present in one area. Tier 2 UCBs, tier 3 UCBs and tier 4 UCBs, this is the criteria for their like classification. Tier 2 UCBs with deposits more than 100 crores but up to 1000 crores, and so and so. Okay, so I hope this is clear that the individual borrower can take 60 lakh for tier 1 UCBs, and the individual borrower can take 140 lakh from the other UCBs for the housing loan. Okay, this is the maximum. Now these were the earlier instructions. These were the earlier norms. Now it has been decided by the Reserve Bank of India to revise these prudential limits as given in the following paragraph. So now let's discuss the revised norms. So the revision has happened in the norms for aggregate exposure and the individual exposure also. Let's discuss that. So aggregate exposure of a UCB to a residential mortgage, that is for the housing loans to individuals. Okay, so the total exposure that a UCB has for the residential mortgages other than those eligible as the priority sector. So exclude the priority sector because that is totally a different topic. Let's say that you are doing the aggregate exposure or the UCB is doing the total exposure. This shall not exceed 25% of its total loans and advances. That means out of the total loans and advances, the UCB cannot give more than 25% for the residential loans, for the housing loans. Understood? So this is the new limit for the aggregate exposure. So before there was a combined limit for housing, real estate, for the commercial real estate there was a combined limit of 10% of the total asset, but now the limits have been changed, the category or the criteria has been changed. That is, now aggregate exposure of a UCB to the residential mortgage shall not exceed 25% of its total loans and advances, and these housing loans, they are other than the priority sector loans. Okay. So next, aggregate exposure of a UCB to real estate sector, that is for the residential or the commercial entities, we can say, excluding housing loans. Okay. So aggregate exposure of a UCB for the real estate sector, excluding the housing loans to individuals shall not exceed 5% of its total loans and advances. So this has been defined clearly now, and the segregation has been given. Next is individual housing loan limits. Before, for the tier 1, the limit was 60 lakh, and for the tier 2 to tier 4, the limit was 140 lakh. But now the limit has been described for each of the tiers separately. So for the tier 1, now also the limit is 60 lakh per individual. For tier 2, the limit is 140 lakh, that is 1.40 crore. But for the tier 3, the limit for the individual borrowing is 2 crore for the individual housing loan. The limit for tier 4 for the individual housing loan is 3 crore. Okay. So any confusion anyone has in the revised norms? So the revised norms are there now. Any confusion here, anyone? Vijay, I will answer you at the end of the session. Okay. After we have completed this topic. So any confusion, anyone? So these are the tiers that we have discussed, and the tiers are divided on the basis of the deposit size or their how big they are, we can say. Okay. Okay. Now coming to the last point for today, and this is going to be a little difficult. So first of all, how many of you know about the asset reconstruction companies? So I have taken a session before about the asset reconstruction companies, and I have taken a session on this where we discussed about the security receipts. Any one of you who know about this? See, asset reconstruction companies, they take the bad loans or they take the non-performing assets from the banks, from the commercial banks, even from the urban cooperative banks. So urban cooperative banks, they can sell their bad loans to the asset reconstruction companies. Okay. And the asset reconstruction companies, let's say they do not have the unlimited money. So asset reconstruction companies, they are raising the money from the market, from the investors. Now how the asset reconstruction companies can raise the money from the investors? That is by giving the security receipts. Okay, security receipts, this is a financial instrument that can only be purchased by the qualified investors, that are the banks, financial institutions, big NBFCs and such. Okay. So asset reconstruction companies, they can provide the security receipts. Security receipts are backed by the collateral of the bad loan. So this bad loan that is not returning, let's say the loan was of 10 crores and the collateral that is provided. Now if the bank sell the collateral, the bank will have to sell it immediately. The bank do not have such resources to sell it or to waste its time on that. So if the bank sell the collateral, the bank will be able to sell it immediately at, let's say, 6 crore rupees. So bank will be making a loss of 4 crore. Now the ARCs are saying that okay, we can sell this collateral at the appropriate time when the prices go high. So ARCs, they are expecting to recover 9 crore rupees through this collateral. So ARCs are purchasing this bad loan at 7 crores from the bank. From this UCB. Okay. So bank otherwise would have received only 6 crore. By selling the bad loan to the ARCs, the bank is receiving 7 crore. So there is a 1 crore extra that is received by the bank. Okay. So this is the idea first of all, that okay, the ARC has purchased the bad loan with the backing of the collateral for 7 crore. And this collateral is like, it can get the returns after a few months, it can get the returns of 9 crore, let's say. Okay. Now, the ARCs, let's say they do not have this 7 crore to purchase this bad loan. So ARCs, they are selling the security receipts that is backed by this collateral, and this security receipt is like, this is a financial instrument that is sold to the different qualified buyers, to the different qualified investors. So there are different banks that want to invest in this security receipt, and through that the ARCs are getting the money. So ARCs are investing, let's say 4 crore of their own, and they are borrowing 3 crore from through the security receipts. Okay, so this is the idea. So the Urban Cooperative Bank has sold the bad loan at 7 crore to the asset reconstruction company, and asset reconstruction company is creating the security receipts to get the money to invest this, to provide this 7 crore to the bank. Okay, so security receipts, only the qualified buyers, that is the banks, NBFCs, financial institutions, only these qualified buyers, they can invest in security receipts. Now even the UCB is thinking that okay, this security receipt, we know that the ARC will sell it, the ARC will sell the collateral. The UCB is thinking that okay, the ARC will sell this collateral after a few months, and then the ARC will be receiving the 9 crore rupees. That means ARC will make the profit of 2 crore. So UCB is getting the money immediately, that is 7 crore, but the UCB know that after a few months, let's say after 2 months, the ARC will get a profit of, let's say, 2 crore. So UCB also wants to get a chunk of this profit. So UCB can actually, because UCB is a bank, so it can actually invest in the security receipts. Okay, so the transferors, the bank that is transferring the bad loan is known as transferor. So actually the transferors, they also invest in the security receipts of the same bad loan, because they expect the ARC to make the profit, because they expect the ARC to receive more, because they are the asset reconstruction companies that have the qualification, that have the prowess in getting back the money. Okay, so the UCB wants to invest in this security receipts that are backed by this collateral, because the UCB is expecting to make the profit. Okay, so getting this idea, is this clear? So it is a very big topic. I have taken a separate session on this, but I hope you understand the gist of this topic. Okay, so the transferors that is transferring the bad loan to the ARC. So here the transferor is the UCB that is transferring the bad loan backed by the collateral to the ARC, and ARC is creating the security receipt. This UCB is also investing in this security receipt. Now it has been said by the Reserve Bank of India that if the transferor, if the UCB is investing in the security receipt, the transferor, the UCB has to show these security receipts in its book, in its accounting book. Okay, so that means if the transferor, that is the UCB, is buying the security receipts, the UCB will have to show these security receipts in its book, in its accounts. Okay, now let's say that the security receipts, so this is the idea first of all, that see the difference. Now there can be the difference between the carrying value of such security receipts, that is the net book value. What is the net book value? So if you are showing the security receipts in your book, in your account, so there is a net book value for the security receipt. It means the funded outstanding in a loan exposure reduced by the specific provisions made against such exposure. So if you have invested, let's say the UCB has invested 1 crore in this security receipt. There are chances that after 2 months, maybe the ARC will not be able to receive the money. The ARC is expecting to receive 9 crore, but what if the ARC is not even able to receive 1 crore, 2 crore or even 3 crore, let's say. So then all the investors that have invested in the security receipt, will they make profit or will they make loss? So the bad loan was purchased at 7 crores by the ARC. But now the ARC is not, after 2 months, let's say the value further decreased, like it is happening in our shares, in the share market, that it is keep on falling and falling. Okay, so ARC, let's say it was expecting to receive 9 crore, but now it is only receiving, let's say, 2 crore through that collateral. Huge loss will be made by the ARC, by all the investors that had invested in the security receipt. Even this UCB will make a lot of loss in this security receipt. So security receipts, they are very, very complicated. They are very, very we can say risky. Okay, that's why only the qualified buyers, only the big institutions, the financial institutions, only those are allowed to buy these security receipts, because the RBI knows that these are risky. And that's, if you are showing, if a bank is showing the security receipts in its book, so net book value has to be calculated. Net book value is the value of the security receipt that you had given, that is the money that you had given to buy the security receipt. Here it is 1 crore. Now against this, because whenever a bank is giving a loan, the bank has to keep some provisions. You know that, right? That if the bank is giving the loan, the bank keeps some provisions with themselves, because the bank know that the loan is risky. All the loans, even if you are a friend of mine from past 3-4 years, then also because of your conditions, maybe you will not be able to return my money. So all the loans that are given, they have some risk attached. Okay, we are not talking about government, all the loan to the private entities. Okay, so the loan given by the loan or the investment done by the banks, they have some risk attached. So the provisions have to be maintained. The provisions against the loans, against the investment. So against the loans, against the investment, the provisions have to be maintained. The provisions have to be maintained by the bank. Similarly, if the bank is investing in the security receipt, 1 crore is invested in the security receipt, so the bank also has to maintain certain provisions. So net book value is the value of the security receipt at the time of the purchase minus the provisions that the bank has kept for this security receipt. So let's say the provisions are 10 lakh. So the net book value will be 90 lakhs. Okay, so the difference between now carrying value of such security receipt, this is the net book value. This is the net book value. So the carrying value of the such security receipt is the net book value, that is 90 lakh, as 10 lakh of provisions are already kept by the bank. Okay, now after every 6 months, after every year, there is the valuation that is happening of the security receipt. Let's say the security receipt is being held for 3-4 years. So after every year or after every 6 months, there is the valuation that is happening. So the valuation of the security receipt has fallen down, and the security receipt is valuated at 70 lakhs only. Okay, so the difference, so there is the difference between the carrying value of such security receipts, that is the net book value, that is at the time of purchase, what was the value, from that provisions have to be deducted. So this is the net book value, this is the carrying value of such security receipts, and there is the difference between the current valuation of the security receipt and the net book value of the security receipt. Okay, so it was said by the RBI that for this difference, there is the provisions that the UCBs have to maintain. So the carrying value of the security receipt is the net book value of the security receipt. Okay, so let's say the security receipts were purchased at 1 crore and 10 lakh of the provisions have already been made by the bank when purchasing the security receipt. So 90 lakhs is the net book value or is the carrying value of the security receipt in the books. Now the current, let's say the current valuation of the security receipt, let's say 10 units of security receipt has been purchased for 1 crore with the provision and such. Now the current value of the security receipt of these 10 units is only 50 lakh. So that means the value has fallen down by 40 lakhs. So the RBI is saying that maintain the provisions for this, because this is just like after 1 year or after 2 years. Maybe the collateral will be sold after 3-4 years or after like for a time, like after a time being. So maybe then the value can increase. But for now, we can see that there is a direct distinction and there is a direct fall down of the current value. So for that, maintain the provision for the loss. Okay. So this is the idea. So UCBs need to provide. That means they need to keep the provision for the valuation differential on the security receipts. The difference in the valuation, that is the difference between the net book value and the current value. On the next financial reporting date, the current value that is of the security receipt. So the provisions have to be maintained for this differential. And it was said in 2022, it was said that these provisions that the UCBs have to maintain for their security receipts, they will get a time period of 5 years to maintain this provisions. Okay, that is from the financial year 2021-22 till financial year 2025-26. They have this time period to maintain provisions for the differential between the net book value and the current value of the security receipt. Now what has happened? So ये मतलब पूरा story, is it clear? So is this clear? That it before in 2022 there were 5 years. There were 5 years that were provided to the UCBs, that are the transferors of the security. Okay, that you have to maintain. Provisions for the valuation differential. So valuation differential of the security receipt arises due to difference between the book value, the net book value of the transferred assets, and the actual realizable value of the security receipts, that is the current value of the security receipts that can be realized. Okay, so this is the idea. Is this clear first of all? Yes, current valuation means that in the next reporting date, what is the value. So whatever, like whenever the security receipt is calculated again or it is valued again, so what is the value? Okay, maybe when you bought the, let's say you bought let's say diamond, yesterday you bought diamond, or last year you bought diamond, so it was of 50,000, but the current value of the diamond is, let's say, only 40,000, the same diamond. Okay, so that is the net book value is the purchased value minus the provisions that you have kept already, and the current value is the value when the security receipt is currently valued. Okay, now see what is the review that has happened. Now what the change that the RBI has said. So on a review, the RBI has said, the RBI has decided to extend the above glide path for the UCBs for additional 2 years. That means the UCBs were provided a time period of 5 years from financial year 2021-22 to financial year 2025-26 to maintain the provisions for the differential in valuation of the security receipt. But now the RBI has said that we are going to provide 2 more years to the UCBs, because maintaining the provisions for, you can understand that the UCBs, they are trading a lot in securities. The banks, they are involved in a lot of securities, okay, in the security receipts. So if the banks have to maintain the provisions, additional 2-year timeline has been provided to the UCBs. So on a review, it has been decided to extend the above glide path for the UCBs for additional 2 years. That is, before the ending time was financial year 2025-26, now the ending time is financial year 2027-28. However, any provisions already made for the specified security receipts by the transferors, by the UCBs, so any provision that has already been made, that should continue to be maintained. It's not like that you have got 2 more years, so you will get relaxed and you will actually use the previous provisions that you had kept. That you cannot use. If you have kept the provisions for the security receipts, let's say out of like many security receipts you have bought, so actually the net book value of the total security receipts for the different loans that are there, so net book value is, let's say, 500 crores. Out of this, like the current value is 400 crores. So there is the valuation differential of 100 crores and you have started to keep the provision of 50 crores already. So you cannot dilute this provision now that you have already kept. 2 more years is given to build up the provisions, to increase the provisions. You cannot wait for the last date to build up the provision. If you have kept the provision for some of the security receipts, that should not be diluted now. Got it? This is the idea, that any provisions already made for the specified security receipts for the security receipts invested by the transferor shall continue to be maintained. These provisions shall continue to be maintained. They should not be diluted. They should not be decreased. Okay. So this is the idea. This is the whole change that the RBI has brought. So this is the first question. I hope you will be easily able to answer this question. Okay. So this is the first question. Before going to the second question, let me show you that if you go to edutap.in, you can go to EduTap's website, where in the free material, you can go to the blog section where you can know more about the examination that you are preparing for. So let's say you are preparing for the RBI Grade B examination. So you can know more about the RBI Grade B examination just by going here. You can go to the RBI Grade B and you can know more about the RBI Grade B examination, the pattern of the examination, the syllabus for the different components, as well as let's say you want to get the strategy for the different components, so that also you can get, okay? As well as if you want to see the success stories, that how the toppers have achieved their dream, what was the strategy that the toppers have utilized. So all of this you can see freely. It is given in a very well articulated manner, okay? I have an announcement to make also, so do stay in the session till the end. And so if you want to get the course, let's say you want to get the RBI Grade B course or NABARD Grade A course, so you can see that who all will be teaching what all you can get in a course. So let's say you want to get the gold course, so what all will be provided: live classes, concept classes, recorded classes, the concept note, summary sheet, quiz, test, and what all you will be getting, that is defined here. So before purchasing any course, do see that what that course is offering. Otherwise there is no benefit of getting the course and then not liking it, okay? So and do see that who all will be teaching. So this is it. This is the first question that I hope you will be able to answer, and this is the second question that I hope you all will be able to answer, okay? Now on next session, so next session, that is on Tuesday, it is also going to be very, very important, because there we are going to talk about a new publication of the RBI. So that is also going to be very important. So do attend the session on Tuesday, okay? That is going to be a very important session. Next, on Thursday, I am thinking of taking Ask Me Anything, because I was getting a lot of queries regarding the current affairs, how many months to cover, and like how to cover RBI notifications, press releases and such. So there will be a Ask Me Anything session on Thursday, and if you have any query regarding preparation, there we will discuss that how much in depth you should study, from where to study, what additional sources to follow. So that will be on Thursday. Ask Me Anything will be taken for the RBI Grade B and RBI Grade A. So there is the higher possibility of the RBI Grade A to come this time, okay? So this will be Ask Me Anything session for finance, current affairs, RBI notifications, RBI press releases, and this will be for the RBI Grade B and RBI Grade A, okay? So this is the second question. I hope you will be able to answer this question, and do give me the right answer of the homework questions. Do give me the right answer of the homework questions. Do attend the session of Tuesday. That is going to be very important for your preparation. I am telling you this very clearly because it will be important for your static as well as for your current affairs, okay? So Tuesday session is going to be important, and on Thursday there is Ask Me Anything that you should attend. If you have any queries or you want to know more about where to study, how much to study, how to study. And Vijay, your question, do mail us at hello@edutap.co.in, because I am not a faculty in the banking channel. There are other faculties that are there, right? So do mail us at the hello@edutap.co.in so that they are able to help you out, okay? Or you have a query about SEBI and RBI. Sorry, I thought you had a query about banking. Okay, so whatever additional query you have, the team will be able to help you better after seeing like the posting and such. So do mail us at the hello@edutap.co.in, or you can call us here also for your clarity that you want, okay? Okay, then thank you everyone. Thank you for joining. You are most welcome, Nitya, Saurish and Raj. And do give the right answer of the homework question in the comment section below, and whoever gives the right answer